Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from across the United States, Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me today for our market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning, and thank you so much for joining me.
Good morning. It's actually a little bit of a chilly morning this morning.
It is.
I think it was 55 degrees when I walked out of the house. I'm glad I actually had the jacket.
Well, it is getting cooler here in the New York City area, and now when I wake up in the morning, it's pitch black and it is dark. So, we know daylight savings is right around the corner, but that also means a lot of it at risk, right, with the election coming up in November. But before that, what are we celebrating today?
Oh, so a couple of important ones. It's Leif Erikson Day. And if some of our watchers will remember, back in elementary school, we learned that Leif Erikson actually arrived in the North American continent somewhere around the year 1000 and 500 years before Columbus, and is credited for being the first European. He was born in Iceland and was from Norway to really set foot in the North American continent for a long time. And secondly, and for our watchers in Korea is, and I hope I say this right, is Hangul Day, which is the day that commemorates the creation of the Korean alphabet, which I think is from the mid-15th century.
So a lot to keep our eyes on today in addition to celebrating those two events. And it's really interesting because Columbus Day is right around the corner, isn't it?
Yes, it is, next Monday. But we'll be here.
Yes, indeed. We won't have a holiday for that day because U.S. markets will be open. But in terms of what we're keeping our eyes on this week, it's been quite the roller coaster of a week because U.S. equities closed down on Monday, they soared yesterday, and here we opened lower, but we're back up again. So shall we start out with the market check this morning?
Have a look.
Well, let's take a look at the Dow Jones Industrial Average this morning. We are seeing that index higher and up by over 100 points. Meanwhile, the Nasdaq Composite Index has turned higher as well after a lower open and is up by 0.36%. And the S&P 500 right now is higher, and we are seeing that index up by nearly 0.4%. But we have a lot to keep our eyes on this morning ahead of inflation figures Thursday morning as well as Friday morning. We get the Fed minutes out later this afternoon.
That's right.
And we've been hearing from a lot of Fed speakers, but it'll be interesting to see those minutes.
Yeah, the minutes that just give a little bit of more, fill in the background about what they were thinking when they were doing the 50 basis point move. We've had a lot of Fed speakers, as you mentioned, so that's not as much of a mystery, but nevertheless, it's still going to be parsed by by the market to see if there are any clues, and also what the staff economists think. I mean, it's a fairly long document, the minutes, and people will definitely look at that. One of the things that we saw this morning, actually, before we get to the Fed, was mortgage rates.
Yes.
And the mortgage rates come out every week, and today, the 30-year mortgage rate, I think, was up at 636, up from 614 just a week ago. So 22 basis points from a week ago, and it's the first rise since July the 3rd. So let's take a look at that for our viewers. Let's look at graphic one. So these are where the mortgage rates are, and I always like to take a step back so we get a little perspective. The chart on the left is a 5-year chart, and the one on the right is about 30. It goes back 30 odd years, and you can see that it's ticked up just a little bit. Hasn't been able to go above 6, and from a high of nearly 8 early, I think late last year, maybe in the November, December time. So, and if you look at 2021, 22, and the back end of the pandemic was only 3%. So, a long way to go before we see those types of mortgage rates again, and I'm not sure we will, because I think the neutral rate, as Danielle DiMartino-Booth mentioned yesterday in our show, she thinks the neutral rate is going to end up somewhere with a 2 on it. So I think maybe 4 or 5 is the most that we're going to get in terms of mortgage rates, somewhere on the 4s perhaps. And then on the right-hand side, you can see how much rates came down and then spiked back up. And let's quickly look at graphic number 2, and it's also on mortgages. So here's the average house price and mortgage size, and these are both 5-year charts. So the average house price in the U.S. is something in the range of around $500,000, and the mortgages are about $390,000. Again, giving you an idea of the housing prices have been off the highs of mid 2023, but still quite elevated over time. And mortgage sizes have drifted a little bit lower. And in terms of, just to give people an idea, if you have a $400,000 mortgage, so just using an average here, $400,000 mortgage, the difference in 100 basis points, so 636 instead of 536, is $250 a month. So that, for an Americans like to get as much house as they possibly can. Those numbers sort of make a difference at some stage. If interest rates are 200 basis points lower and mortgage rates are concomitantly so, $500 difference payment a month, you can buy a lot more house.
Yeah, you bring up an important point there, because when we look at the charts, so whether we're talking about mortgage rates or the average home price in the U.S., we've seen significant swings pre-pandemic, during the pandemic, and in the current environment as well. And when we're looking at lowered interest rates, it takes a while for that to work itself through the system and start affecting rates, correct?
That's right. That's right. And sort of rates, go down on an escalator, go up in an elevator, and I mean there is competition, so those rates will, will come down. And if you think about it, mortgages on the, on a sort of around a 6% handle. If you can hedge them properly with the treasuries, that's actually is decent business. And of course you get all the fees, and then when sort of refinancing, you also have to pay a lot of fees too. So banks in some ways are sort of happy to do that. They're not happy giving up the higher rate mortgages, but a lot of those have been sort of securitized and sold to a lot of other investors, so it's no longer on their books. So actually, the holders of those bonds are the ones who are unhappy. The banks will just, bring in the business.
And for viewers who are perhaps outside of the U.S. and they're not so familiar with how borrowing works here in the U.S. or even refinancing, can you walk us through this? I know we've talked about the differences between variable versus fixed year mortgages and the rates involved. So tell us how this works.
So primarily in the United States, and it's different in the U.S. than in many other countries, especially I think Canada and the U.K. come to mind. If they're fixed, most of the mortgages are fixed rates. So you take a rate, and that's your rate for the next 30 years. And the great thing is you can refinance pretty much any time. So if rates drop, you can say, oh, rates drop 200 basis points. I can save $500 a month. How much are the fees? Oh, $3,000 at one time. Well, that's only 6 months of, 6 months of payments that I have to make up. So I'm happy to pay $3,000 or whatever it happens to be. Could be more if you have a jumbo-sized mortgage. You save a lot of money ongoing. And to hedge that, that's why the mortgage bond business here, the asset bond business here is so big. Whereas in other countries, I don't think the mortgages are actually much shorter. They're not 30-year bonds, 30-year residential mortgages, and some people use 15 if they want to pay it off quickly. Other countries are sort of 5-year mortgages, and the rates adjust to whatever the market interest rate is. So the dynamic's very different, but it makes the U.S. I think a better place to buy homes. And buying a home is if the homes go. I mean, certainly buying a home is expensive in terms of maintenance and property taxes, but it's a great lifestyle. And if property prices go up over time, buying a home at the right time can be a big wealth builder. And I think that's really what the United States has done that fairly well. You get fewer and fewer people buying houses now, for a number of demographic reasons. Having fewer children is a big part of it, but that's why the U.S. mortgage market is a little bit different than everybody else's.
Yeah, I think it's important to make that distinction, and as you mentioned, mortgage systems in terms of the rates, fixed versus variable, that can make quite a difference depending on where you are in the world. So.
Right. And you can get low adjustable rate mortgages, but know that there's an element of risk in there. They can go up. They can typically only go up 2% a year, but if you did an arm when rates were, you thought, at the highs and they went up further, that can be actually quite painful. You can probably refinance those, but rates will be higher, so you really can't. You'll be stuck with higher rates until rates sort of come down. So that's the arms are good. Sometimes people buy a lot of house using adjustable rate mortgages because the rates are lower than the fixed rate mortgages. But you take the risk that they can go up, and you can't really refinance because market rates are so high when you want to refinance.
And speaking of risk, we are watching several stories this morning.
Yes.
Of course, Hurricane Milton, which is about to make landfall in Florida later on today. We are watching that storm. And in addition to that, we're keeping our eyes on Google as well as the Department of Justice. So let's start out by looking at where Google is this morning and why we're seeing shares lower.
So I think Google's down about 1% or so, and the big news, we talked about Google yesterday, and a federal judge required them to do certain things, but this one is sort of bigger. The Department of Justice has told another federal judge that oversaw an antitrust case that Google lost, that the remedies that they're looking for could be a breakup of Google, to separate maybe their search, or make them sell off pieces of their search business, opening up their search algorithms to competitors. So essentially Google, and depending on, there was a very, very long article, I was trying to read it on the subway, that they control in some ways maybe 80-90% of the markets, and that's a little too much. So I love tech. I think tech is one of the big drivers of growth in this country, but do we need tech this big where you have companies like perhaps like an Amazon or Facebook or Meta or Google that really dominate the landscape so they can lock everybody out? Or we better with sort of a lot more smaller tech companies that can't, say, control access, control the news, control the narrative. And I think a lot of people after 2020 are a little more concerned about that, because famously the New York Post, which I think is the third largest circulation in the country, was essentially shut out from running the Hunter Biden laptop story, which turned out to be true, but the big services actually shut them down. But back to Google, it's going to, it makes for a great headline. Shares are getting sold off, but they're going to litigate this for years. And they can't even appeal it yet because the judge hasn't come out with what he wants to be the remedy. So it's sort of, you can't appeal it until there is something to appeal. And Google will spend tens, if not hundreds of millions of dollars litigating this. Now, Google is litigating against the European Union, which has been, sort of very, very anti. There's the chart on Google. Down a bit today. I don't expect to collapse because even though they're fighting battles on many fronts, it's going to take years, and they're going to have the best and the brightest in terms of the legal eagles on their side. But I think it will be a continuing issue because they are actually so dominant.
Yeah, and when we look at the Mag 7 names this week, we've seen a lot of volatility for Google as well as the other Mag 7 names. And when we think about Alphabet as a company, or even Google, the name Google is not just a noun, but it's also become a verb. So when we're talking about whether or not they have a monopoly on web search, that should give you an indication, at least to begin with.
It's interesting you should mention this. I was reading an article earlier this week, and they said the companies that took like Pets.com or whatever that ended up not doing very well because the name wasn't sort of that interesting. And they said it wasn't really because of the name, it actually reflected on the thinking of the founders, right? Google, what is a Google? The only Google that I know, and it's spelled differently, is I think a 1 followed by 100 zeros after it is the number of Google. I can't remember the number of zeros actually. Yahoo was very successful for a very long time. Amazon, where did that come from, right? So I think the article said that it speaks to the mentality of the founders. If they had something that was a little offbeat and strange, but becomes part of the vernacular, like you FedEx things, can you Xerox that copy of us? And eventually, Xerox, struggled a lot and is a shadow of its former self. but it goes the name shows the imagination of the founders, which is really interesting.
Yeah, and another name that I just thought of because you mentioned Xerox, right?
No.
Back in the day when we used to photocopy or scan things, we
Yes.
used to call that Xeroxing, but Kleenex, right? Instead
Exactly.
of tissue. So.
Exactly. Very powerful, and I guess it shows the powerful thinking behind the product of their service.
Yes, and smart branding as well.
Yes, certainly.
And as we take a look at global markets, I do want to shift our focus on over to China. So the Chinese stock market took quite a tumble, and apparently we're supposed to get another presser this weekend on Saturday. So what's going on there?
So the CSI 300, which is their benchmark, fell 7% today, and now closed below where it closed before they went on holiday. The Hang Seng was down 1.5%, and similarly has now closed below where it was on the close the 30th of September. So what does this tell us? It tells us that the market is it's still much higher than where we started, but they're a little disappointed. And now we have an announcement of a Saturday morning press conference.
That's very interesting timing.
Yes, and I think in the Asian countries, certainly my mother would tell me that they actually used to go to school in the morning, on Saturday morning. So that was pre-war, and I mean Second World War. My mother had me when she was a little bit older. So Saturday mornings are often a work day in Asia, so it's an interesting time for them to have this press conference. And you'd like to think that they better have some sort of interesting thing for the markets. Some of the American banks are thinking 2 or 3 trillion yuan worth of stimulus that they need to announce, and that may or may not be enough. But you better hope that it better be something like 2 trillion, or the market is going to correct even further. I'm not going into this weekend short because I don't know what's going to come out. But over the next couple of days, if we get more of a retracement in the Chinese markets, FXI is something that I put on a small position. If we get a retracement further, I'm going to add a little bit to it. Because I think the risk is they do announce something substantial, and it opens up 10% higher on Monday morning, and you never get a chance to get in. I think you'll have a chance to probably get out. You might take a little bit of a lump, but I'd rather buy on a dip here than certainly be short or sell out my long and not get a chance to get back in. Whether or not they can fix the economy, they've certainly given, I think, a charge to the financial market. So I'm looking for a chance to maybe sneak in a little bit if we get a little bit lower here. So don't be short. Certainly.
Yeah, and the timing of this is very interesting as well because, as you mentioned, Saturday morning, it'll be Friday evening here, East Coast, West Coast of the U.S. I'm sure we'll be keeping our eyes peeled in terms of what comes out of this. But even earlier this week, as China came back from their holiday, we were waiting to hear from them, but we got a disappointment because we didn't get any announcement in terms of the measures pre-holiday.
Right. And the one good thing about announcing things on a weekend is the market gets to digest it, think about it. There aren't so many sort of knee-jerk moves or panic moves. You actually sit and get to, sort of think about that. So you wonder, should the Federal Reserve meet on Friday and announce on Saturday and let the market digest? Surely, I just jest because I don't think the Fed wants, a lot of people in the Fed wants to work on Saturdays other than perhaps the governors and the presidents themselves.
Yeah, that's interesting you mentioned that as well, because do you think we'll see some reaction over in the crypto market, given that we see 24/7?
That's the only one that's open. You're right. You're absolutely right.
Yeah, because when we think back to the summer when we had a lot of market-moving events in terms of politics, we saw the crypto market react immediately. What comes to mind is the Butler, Pennsylvania rally back in July and the attempted assassination at President Trump as well. So.
Right. And that's where you can trade all the ETFs on the on the exchanges now, but they're not open on the weekend. So you've got to keep your little Coinbase account or wherever account you happen to use. But in terms of risk, we should actually quickly touch on the Middle East.
Yes, absolutely.
Crude has come back down, Brent and WTI, over the last couple of days after Brent, I think, nearly touched 80. I think the market's long and a little bit sort of bored waiting for the Israelis to retaliate. And there seems to be, I think, reading the undertone of it, furious discussion between the Americans and the Israelis. They want the Israelis, well, not too many, too many bad things didn't happen to you. Not only one person died. Don't hit the oil fields. Don't hit the nuclear sites. And yesterday, the defense minister was supposed to come here and visit with Lloyd Austin, our Secretary of Defense, and that trip was canceled at the last minute by Prime Minister Netanyahu, leading to some speculation that they want to finalize plans for a strike on Iran. We don't know what it's going to be, but the market certainly is long and says, maybe it's not as, if the Americans can apply pressure to the Israelis, not that it's been successful recently, then, we don't, we'll get a concentrated strike on a military facility and we don't broaden the conflict, which is what, sort of, I guess, maybe the world and world hopes for and the markets hope for, except for maybe the, bullish oil traders. So that's something to keep an eye on.
Yeah, and as you mentioned, in New York morning trade, we are seeing crude oil, Brent crude futures both down about 1% today, and that is a significant pullback from the highs we saw in the previous session.
Yeah, we've been up, I think, depending on WTI was 5 days in a row before the last 2 days. Brent was probably 6 or 7 sessions in a row before the last 2 days. I think we may steady here a little bit because the Israelis will answer. It's just how they answer.
And that is one area of the world we'll keep our eyes on given the tensions in the Middle East. I do want to shift our focus since today is Wednesday and we did get the EIA figures in terms of inventory. So according to the Energy Information Administration, U.S. crude stocks are higher, and this comes as refining activity slipped last week, and we also saw inventories for gasoline and distillates lower.
So this is a little bit of a mixed report. Inventories, certainly crude, the stocks are higher, but distillates are kind of smartly lower, and gasoline, I think a little bit lower. I'm just trying to see it here. Doesn't look like it's really impacted the markets very dramatically. I think people have the position they probably want at this stage, and it's now a little bit of a waiting game. But I actually want to get back to, and I missed it. You talked about the Fed, and we'll look at their minutes a little bit later today. But Adriana Kugler, who was a new governor of the Fed, and who's Danielle talked about this yesterday. We don't know very much about her. And she gave actually quite a long speech on global inflation yesterday, which I won't get quite into because that's a very, very long speech. But she made a couple of points that I thought were very, very interesting. And it goes to some of the things that Ken Fisher has talked about when he's been on the show and on the interview. And she had 2 points. She says, U.S. businesses, the United States had more business start over the past few years than 70 within the last 2 years and than in any other country. So some business might fail, but we start many more business here than in other countries. And in part, it's sort of those animal spirits. We have a great idea. Let's start a business. Some of those fall by the wayside, some of those go along, but some of those end up being really, really big businesses that actually employ a fair number of people. The other thing she said was also very interesting. It was a very data-heavy presentation. Is that in terms of the immigrants to this country, after 2 years, and this is about 2020, so it might be a little bit dated, but over 70% of the migrants to this country have a job after 2 years. Compare it to, say, Germany or the UK, I think you're talking about maybe like 30% of migrants actually have a job. And that says a few things. One is that immigrants sort of assimilate in the economy much faster, and also that we have a much more sort of flexible economy. One of the reasons why sort of our economy and our markets are still sort of the envy of the world, though you wish that we certainly wish that we do some things better here, that our political situation was a little less polarized, but nevertheless sort of capitalism finds a way, and as long as the government doesn't mess around with too much, and one of the reasons, a couple of reasons why that this is such a strong economic system.
And Tai, you're speaking about two key issues here: small businesses, entrepreneurialism, the ability to start businesses to boost the economy here in the U.S., and of course immigration. With less than 30 days until the presidential election, November 5th, I think these are two issues we'll keep our eyes on.
Certainly will.
Thank you so much for joining me, Tai.
Thank you.
And coming up next, I will be joined by Richard Bayles, partner at Karani Asset Management. Don't go away, we'll be right back. Welcome back to Global Money Talk, live from the New York Stock Exchange. Pharmaceuticals, steel, and insurance. Well, what do these industries have in common? They share a theme of adaptation as well as resilience. The steel and pharmaceutical industries face pressure to navigate regulatory scrutiny as well as reduce their environmental impact, and all three sectors need to innovate to address challenges. Steel with cleaner production, pharmaceuticals with drug safety, and insurance sector must contend with extreme weather impacts. Joining me live at the New York Stock Exchange for today's Market Insight to talk about navigating economic cycles in these industries is Richard Bayles, partner at Karani Asset Management. Thank you so much for joining me today.
It's nice to be here.
Well, last time you were here, we were talking about GLP-1s, and since then the CEO of Novo Nordisk has testified in front of Senate. So what do you make of what we heard from the CEO, and what can we expect as we move forward here?
Okay. Before I begin, I'd like to clarify something. I may have left the impression that obesity comes from bad diet, no exercise, and so forth. It wouldn't be considered a disease by the FDA and others if that were the case. It's a disease because you can't avoid it due to your own genetics. Throughout history, it may not have occurred to people because they didn't get the kind of diet that triggers it. So it's a combination of diet and genetics. I just wanted to make sure that people didn't get the impression that it was only sloth and indolence that made it happen. Not that a case at all. People with obesity have a treatable disease. So, tell me again your question.
Yes. So, of course, we spoke extensively about this last time you were here, but I do want to get your take on the testimony by the CEO of Novo Nordisk.
Well, we can't say Bernie Sanders was soft on them. Lars has pointed out in other venues and over time that we are at a change in circumstances. Historically, most medicine treated a disease or something that happened right now, not over a long period of time. Diabetes is a chronic disease. Medicine has turned cancer into a chronic disease, and heart disease and other things. We take medicines long-term for that. This means that medicine has become, pills, drugs have become significantly more important. That shifts people's perceptions. So we have a system that has, in the United States, that has been jerry-rigged since World War II. We started, you couldn't hire somebody away from a rival by paying them more money. There were price controls. So you gave them health care. And if they already had health care, you gave them better health care. Well, that's the basis for a system, but it's not really the good basis for a system. It'd be very nice to have analysis. So over the 75 years since the war that's been going on, the treatment of medicine has changed, and chronic disease, such as diabetes, has become more important. And the treatments of chronic disease have improved and improved and improved. And each time they have improved, that's more expense, that's more money, that's more cost to the pharmaceutical companies. A few years ago, it was estimated that a new drug cost $1 billion. By the way, that's not the fixed cost of having all the scientists and so on. That's just the operating costs, the incremental costs of doing the work on a drug. And maybe there's a 5% chance that a molecule that starts out gets into the clinic, through the clinic, and into practice. So it's an expensive process. It's now a more important process, and we're not prepared for it, and we don't have a system that will be flexible enough to deal with it. That's risk, because we're at the juncture where that has to take place. That risk has to be, that change in circumstances has to be dealt with, and there has to be flexibility over how we spend the money that pays for the drugs. That's the regulatory risk.
Yeah, and we are here at the New York Stock Exchange, and when we think about these companies, these pharmaceutical companies, one of the election issues is pricing when it comes to pharmaceuticals. And regarding the conversation that the CEO of the company Novo Nordisk testified about, it's about pricing. So give us an understanding when we're talking about drugs such as Wegovy or Ozempic, what are we looking at when we're talking about both sides of the Atlantic?
Okay. In Europe in particular, there's a single payer, there's a single buyer. You deal with that single buyer and you sell them the drug and off you go. In the United States, there's an insurance company, there's a pharmaceutical management company, PBM, and there's a drug retailer. And then there's the doctor to persuade to do this. That's a pretty expensive process. And that's part of what I meant about it's built up over time without any correction, without any change. So Novo Nordisk and others have very little selling cost to sell their product to the government in Germany, the government in Denmark, the government in France. Here, they've got a lot of selling cost, and they have a lot of jerry-rigged ways to do that. Back during World War II, nobody spent any time giving a rebate to some middleman for a drug. Today, that's common practice, and it makes the whole thing cloudier. So this is a serious issue for all pharmaceutical companies. Novo Nordisk and Lilly may overcome that from the very size of the market and the need for their products. We don't know that, and that's part of the risk. But something will have to happen. The other thing is, this didn't happen with drugs when I was a child. The drug means, Ozempic means, you're less likely to have heart disease. Well, what credit should they get as a seller for that? Well, actually, nobody knows, because nobody knows how many fewer heart attacks there will be over the next 20 years. Who will not get a heart attack because they lowered their weight with a GLP-1? We don't know. But it seems logical that some of the expense for the GLP-1 ought to go against the savings for the operations that didn't happen. Leave aside the pain and suffering that didn't happen. Nobody knows what that's going to be. Nobody knows what's fair. Nobody knows the facts. So it's going to be a long, tortuous process. What we need to hope as consumers is it isn't so long, so torturous, so expensive, so difficult that pharmaceutical companies cut back on their R&D and come up with fewer drugs.
Yeah.
Coming back with fewer drugs is a really bad idea. Coming back with fewer chances for drugs is a really bad idea. Staying with what we have now, equally a bad idea. So some balance has to take place between the lower cost of treatment, chronic treatment, the avoidance of other drugs, and the initial price of the drug to pay for the research, and very hefty profit margins.
And indeed, I do want to move on to
Okay.
the pharmaceutical industry being under increased regulatory scrutiny, not just in the U.S. but overseas. And for some of our viewers out there who might not know about the price discrepancy when it comes to the cost of these drugs, let's just say Copenhagen, Berlin versus LA and New York, what difference are we talking about here when it comes to price tag?
It depends on how you think about the price. Is it the list price, which they are providing in the United States, versus the price they give to the German government through negotiation? The list price may not depend on negotiation at all. It may be a way to offset the discount that the middlemen want, so that they can pocket that discount, perhaps legitimately, perhaps using their position to excess. I don't know. And in Germany, there isn't that middle cost. Yeah. So comparing them, as Senator Sanders did, you realize this only costs X? Yeah, it only cost X because it only had to go one step. Here it costs X, Y, and Z because it has to go several steps. The pharmaceutical companies will bear some of the risk of the changes that are necessary. So will the government, so will the middlemen. Everybody's going to have to give up something, and we don't know how much it is. The only hope, well, not the only hope, but a big hope for the manufacturers is the need is enormous, and the effect is really good. So weigh those two things. The risk of change in the payment mechanism, and the value and benefit of providing the medicine.
And when we're talking about regulatory risk, stateside versus overseas in the pharmaceutical industry, what are we talking about here?
Well, the regulatory risk, first there's a regulatory risk I don't think we need to worry about, and that is the FDA. The drugs that we sell, that are sold here, have gone through serious and sustained proving process. Phase 1, does it hurt you? Phase 2, does it begin to do anything for you? Phase 3, is it really good and safe and effective? And the companies have to pay for all of the trials that lead up to that. And they can get to the last minute and whoops, it really isn't as safe as we thought, and there goes $1 billion to no purpose. But because of the FDA, we do not have to fear as consumers that what we're consuming is what we might have consumed in the 19th century, sold out of the back of a horse and buggy wagon. And trust me, ma'am, this'll really take care of your fill in the blank. There's an analogy. I don't remember the figures, but essentially the FAA, the Federal Aviation Administration, came in the 1950s. And before that, airplanes were falling out of the skies. And air travel was not safe. They came in, they inspect the planes, they check to make sure that the runways are clear, they put in the traffic controllers, and now air travel is the safest form of travel. That's the analogy. That's the same thing with the regulation for the pharmaceutical industry. And I am confident none of them would like to go without the regulation, which is an imprimatur that this stuff works and it won't hurt you.
And Richard, I do want to move on to the steel industry. So here is another industry that is also very sensitive to policy while we're talking about policy. So we know that steel as an industry has benefited from tariffs, and we are in a presidential election year, less than 30 days until November 5th. So give me an idea based on what you know. So if Harris wins, what do you think will happen to tariffs for the industry, and what if Trump wins?
Tariffs are an important element for the domestic steel industry. Let's step back a second. This is a great place to produce steel in the modern electric arc furnace melting scrap method. There are essentially broadly two ways to make steel. You can take iron ore and coke and coal and boil them up together in a really expensive, really high fixed cost way. Or you can melt scrap. And when you melt the scrap, if it's really high purity, you'll have high purity steel. If it's low purity, you'll have sort of common steel that you don't really care about the surface or anything else. That's the cheapest way to do it. And if we were to begin the steel industry 150 years ago and could choose that one, that's what we'd have done. We have more old cars, old refrigerators, old buildings to be torn down, and the girders to be melted than any place else in the world. And so we are the cheapest place to make steel. However, we don't make anywhere near the amount of steel the Chinese make, and they make it because they wanted to build a huge economy. And now it's possible they have made this huge economy, and they don't need the incremental steel. So what do we do with it if we're China? Much of it is the old fixed cost, high fixed cost business that's hard to get rid of. And the only way to sell a commodity like steel or paper or glass is to lower the price in the short run. So they'll want to sell a lot of steel here and in Europe. We have a protection because of tariffs against that because they dwarf our business. We need a domestic steel industry. Just because we want to build, we want to be in control of our own economy. And over here on the side, there's the military need. If we want our own tanks, planes, etc., we better have our own raw materials to make those. And so there is a national need for that. However, any tariff raises the cost of the products involved, and cars will be somewhat more expensive if we have a tariff, somewhat less expensive. And you can think about that margin as some insurance against running out of steel if we need it for military purposes. And I think that's a fair bargain. I don't know what Kamala Harris believes. I think since she's part of an administration that has maintained steel tariffs, that she'll probably maintain them if she wins. Trump has promised to increase tariffs, so I don't think there's any risk to the current level. If he wins, it may even be higher. That will have other knock-on effects, but as far as the steel industry and the pricing of steel, it will be protected. So it's a great place to make steel because of our scrap pile, all of those things we have to melt. It's a great place these days because we may be building a lot more infrastructure than we have in the past. Every steel analyst has hoped that at some point we were going to repair all our bridges.
Yeah.
We haven't, and I don't expect we will.
And to give the viewing audience an idea of what we're talking about when we talk about production in the U.S. versus, say, China, what are we looking at in terms of the bigger picture?
Okay, well, I think we make 100 million tons of steel, a little less in this country, and they make 1 billion. So 10 to 1, something like that. I'm not an expert. I'm not a living, breathing steel analyst, but I think it's something like that. And in Europe, they've used their steel industry, until recently, to stay open because other jobs depend on it. That's changing some, and so they're reducing it. And the part to be reduced is the heavy use of coal, heavy polluting, lots of carbon dioxide created. Those will need to go away because of climate change, and maybe we'll get closer to balance. But given the pace of our work on climate change, I wouldn't bet a lot of money on it. So steel will be a good thing to make here if the price is okay and our demand works out pretty well. You can make your own judgment as to how many bridges we're going to replace, how many solar panels we're going to put up, how many wind towers we're going to put up, that kind of thing. It's probably more than it's been. Probably getting greener will require some construction. How much more is hard to say. Probably not as much as the pricing was 2 or 3 years ago, but probably enough to be a decent return on investment.
And Richard, you've highlighted a lot of issues there when it comes to something such as steel. We're talking about national security as well as infrastructure. And you've been following this industry for a long time, so you understand the competitive advantages, the ins and outs. So I do have to ask you, based on your analyses, what separates the winners from the losers here?
In any commodity, doesn't matter what it is, but certainly in steel, you want to be the most efficient, lowest cost producer. That means decent access to raw materials, which is scrap, and electricity. We have, it's a technical term, but we have the stiffest grid in the world. There are old-time movies where they're executing somebody in the electric chair and the lights flicker when, that's silly. Maybe it happens in some smaller places, some less well-developed places. Doesn't happen here. You can start up an electric arc furnace and the grid in that place, whether it's Arkansas or West Virginia or California, doesn't move. So excellent electricity, raw materials, low cost. Those are big helps. It's hard to limp along with a traditional integrated steel mill. So the two biggest companies making steel in electric arc furnaces are Nucor and Steel Dynamics, and they have that particular advantage over the rest of the U.S. business. And the multiples pretty much reflect some of that because they're a little higher for those two than they are for everybody else. We'll see.
And before we move away from steel, you mentioned a key term there related to climate and sustainability. So when we're talking about in industries such as the steel industry, there is pressure to reduce the carbon footprint. So what does this realistically look like based on your perspective?
Well, you can see a way to get there. You just use electricity from wind and solar. You melt the scrap, and you're probably not going to have much in the way of carbon put into the air. You burn coal and melt down coke, you're going to generate a lot of carbon. So there isn't much in the way of price regulation, tax on the carbon. That's among the most contentious issues in the country, in the world, a price for carbon. Should it come, the electric arc furnace companies, the ones that recycle scrap, will be in a even more commanding position. So that's an advantage to them. We'll see if regulation puts that advantage into law. If it does, I would think that they would have an even greater advantage in the marketplace for selling steel, because they could certify that it was greener, and that would be a good thing.
And Richard, now I do want to move on to insurance. So right now, in terms of climate, here in the U.S., we are watching a hurricane as it fast approaches the region of Florida. And this is a region that was recently hit by another devastating storm, Hurricane Helene. And we're keeping our eyes peeled to see when this hurricane, Hurricane Milton, makes landfall. But we all know, based on recent weather events, whether we're talking about hurricanes or even wildfire, when it comes to property as well as casualty insurance, this is a sector that has to contend and navigate a lot of non-controllable factors. So whether we're talking about regulation or competition or even weather. So give us an overview based on your research and having been an insurance industry analyst, what really makes a good PNC insurer?
Okay. A couple of things as background. First, if you're an insurance company, you actually want to pay claims. If you never pay a claim, who's going to buy your product? If they never need it because you've underwritten it so well, you never ever pay out a claim, they're going to bypass you. They don't need you. So there's, in some senses, claims are an advertisement for insurance. Second, most insurance contracts are annual. So from the standpoint of the company, geez, I made a mistake last year, I didn't estimate how many hurricanes there would be, the severity and so on, and I lost a lot of money. I can reprice my product this year, recoup some of that, and move on with a profitable future. So those are two features of the business that are important to keep in mind. The thing that separates really, overall, if you were to go back 50 years, I did this once, I don't think it's changed much. If you were to go back over 50 years, insurance has been a market perform industry. We have to have insurance. I don't have an apartment in a hurricane zone, but I'm certainly going to insure the contents of my apartment against a fire or any other disaster. I just can't afford to repurchase everything from scratch. So it's a necessary product. The demand for it is quite steady. After very sharp increases, such as we've seen for houses and automobiles in California, or we will see for houses and automobiles in the Southeast, people will say, I can get along without it. And then they'll learn that they can't. There may be some help from the government because the premiums are so high. If there's price controls, that could last a year or so, but then people will withdraw, companies will withdraw the coverage. you don't pay me a reasonable amount of money to do this, I'm not doing it. I can give the money back to my owners, and they can do something else with it. So it's hard to see in this country where we will have such regulation that it injures the companies over over an intermediate period of time. But it is difficult for a lot of people, and there will be heartbreaking stories about people who've lost their houses and so on. And your heart even goes out to someone who didn't bother or didn't decided, I'll risk it, and now they don't have a house. If you have the government say, well, that's okay, I'll take care of it, the government will be opening up a huge amount of expense at a time when the deficit is high anyway. So I think we'll have a commercial insurance business. I think we'll have the need for insurance. Payouts are painful for those companies in times like this, but they'll do all right. Now, you asked about what makes a better than average great company, and that is selecting risk.
Okay.
That is the single most important thing an insurance company does. If you ever listen to Warren Buffett at his annual meeting, he heaps praise on the guy who runs their insurance business, Ajit Jain, because their insurance business generates what's called float, the money they take in before they have to pay any out. That float is expanding, and what do they do with that float? He's bought stocks, and that's been really successful. It's been so successful that others have tried to do the same thing. Don't do it if you're not Ajit Jain and Warren Buffett. And there are several hedge fund managers in the last several years who tried that with reinsurance and have closed down those operations. So it's difficult to earn a profit. If you don't earn a profit, you're paying for the money you invest rather than being paid for it. That said, the best tests of an insurance company is what is their record over time in generating underwriting profits. And among that is a small but important detail. Does that money develop well over time? So if every year you are releasing reserves, so you took in $1, you put some of it in reserve, you invested the money in the reserve, and 3 years later you have, I didn't have to pay out as much as I thought I would. Now I have not only the reserve, but a little bit more. That little bit more is the mark of a really good underwriter. And it's something you should be looking at as you're choosing an insurance company to invest in or to buy the stock. The underwriting profits generated and the development of those profits. A case in point is GE, a number of years ago, at the beginning of their troubles, they'd shown profits in insurance for a long time. Unfortunately, they weren't developing very well, and ultimately they had to pay the losses, and it was devastating. It's not too strong a word for GE, but they did show profits for a long time. You want to see how the profits are, how much profit is generated, and how it's developing.
And as we approach the end of this hour, I think you've given us a great overview of these three industries, as well as weighing in on the risks, because I think it is very important to highlight those risks in addition to how to identify those opportunities. So, Richard, thank you so much for joining me here today at the New York Stock Exchange. Great to have you back.
I enjoyed it.
Thank you. And that will do it for Global Money Talk from the New York Stock Exchange. We're so excited to bring you daily coverage here on SAMPRO TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much to all of our viewers for joining us today. We'll see you back bright and early tomorrow. Have a wonderful day.
Thank you.